Hey everyone, in today's video I'm going to share my paycheck routine, the simple system I use to keep my finances organized and move closer to my goals. By following this easy checklist, you can make sure your money works for you instead of just disappearing before the end of the month. I think we've all had those moments where we look back at a paycheck and wonder, where did it all go? So without further ado, let's jump right in. The first step in my paycheck routine is paying down high interest rate debt. Debt comes in many forms, between car payments, student loans, credit card balances, and more. But not all debt needs to be tackled right away. I prioritize debt with higher interest rates, generally anything outside of your mortgage above 5%. There are two common methods for paying off debt, the debt snowball and the debt avalanche. With the debt snowball, you start by paying off your smallest balance first, then work your way up to larger balances. With the debt avalanche method, you start with the highest interest rate debt first, then work your way down. No matter which method you use, it's important to always make minimum payments on all your debts before putting extra towards the one you're targeting. That way, you stay current and avoid hurting your credit score. Now for me personally, I prefer the debt avalanche method because tackling the highest interest rate debt first usually saves you the most money in the long run. The second step in my paycheck routine is making sure I'm getting the full employer match in my 401k. Now here's where my view is a little different from what you'll often hear in the personal finance space. A lot of people call the 401k match free money. I don't really see it that way. To me, it's part of your total compensation. It's a cost to your employer and a form of income to you, the employee. The only catch is you have to take extra steps to actually unlock your match. Maybe it's just semantics, but I think of the employer match as my money, and I don't want to leave any of it on the table. Every employer's 401k is different, but the goal is the same. Take full advantage of whatever match they offer. Some companies match dollar for dollar, others do a partial or a tiered match. A little research into your plan is all it takes to make sure you're getting the maximum benefit. The third step in my paycheck routine is keeping an eye on my budget and past spending. A simple approach I like is the 50-30-20 rule. That means 50% of your income goes to essentials, 30% to wants, and 20% to savings. Easy to remember and a good framework to start with. Each time I get paid, I do a quick check-in. Do I have any big expenses coming up? What categories could I cut back on? And this one always gets me. Is there anything I spent money on in the past that I completely forgot about? Like many things in life, the first step to improving your finances is self-awareness. This budget review helps me stay mindful of my spending and focus on what's actually important. Some common areas people can cut back on are subscriptions that they no longer use, food delivery apps like DoorDash or Uber Eats, and eating out instead of cooking at home. Now, I'm not saying you should never spend money on these things, but the total amount you spend on wants should be proportional to your total income. The fourth step in my paycheck routine is saving outside of my workplace retirement plan, if I'm able to. Now, I put this step after paying off debt and taking advantage of the 401k match on purpose. In most cases, those come first. But once you've handled those and still have money left over after covering your monthly expenses, it's time to think about saving more on your own. That could mean putting money into a savings account, a Roth IRA, or even a taxable brokerage account. Personally, I'd start with an emergency fund, enough to cover 3 to 6 months of living expenses. And once that's in place, I'd move on to a Roth IRA. And after you max out your Roth IRA, then you can look to a taxable brokerage account. The fifth and final step in my paycheck routine is to audit your pay stub. Take a minute to verify everything is correct. Your hours, rate, gross pay, taxes, benefits, and deductions. And here's a tax tip from a CPA. Don't just blindly trust that your withholdings are correct. Think of them as an estimate your employer makes based on the info they have about you. Employers can and will make mistakes from time to time. And they probably don't know about other income or deductions you have outside of work, which can throw off the calculation. If your withholdings are off, it can cost you. If they're too low, you could face penalties and interest next tax season. And if they're too high, it's like giving the IRS an interest-free loan all year round. And that just means smaller paychecks hitting your bank account. Personally, I aim for a small refund each year, just to stay on the safe side. I'll drop a link to an online tax calculator in the description of this video so you can compare that with your withholdings. And if you need to make any changes, you can always submit an updated W-4 form to your employer. I'll show you an example of what the W-4 form looks like on the screen now. So there we have it. That's my paycheck routine as an accountant. With just a little planning up front, you can make way more progress towards your financial goals. If you found this video helpful, please hit that like button. And if you want to see why I keep my emergency fund in SGOV, the iShares 0 to 3 month Treasury Bond ETF, check out the video linked up above. Thanks for watching, and I'll see you in the next one. Take care.